Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's session outlook, we're going to be talking about the US interest rate hike. Of course, before we actually get into it, we've seen in the morning that the dollar was just coming off its recent highs against major peers, and that was on a robust US inflation data, which came out overnight. And of course, the producer prices rose more than expected last month, which of course, it basically cementing the rate hike later today. Also, there is another major bank, the Bank of Japan, that it's starting its two-day monetary policy meetings. And of course, it is expected to hold its policy unchanged. But of course, that would be a possible justification of withdrawing its massive stimulus. Anyways, that's throughout the day. Also, there is an important data coming off from the European Union, the unemployment rate, and of course, retail sales, consumer price index for the United States, which is of course massive key data. We can see major currencies and commodities moving in just before the interest rate hike and the monetary policy meeting of the Federal Open Market Committee. But before that, let's have a look at major currencies and commodities, how they're moving here on the chart. We're looking at the euro dollar. It's moving sideways for the past few sessions. As we can see, it's in a very tight range between the 50 and the 200 exponential moving average, about 20 to 25 pips range. Nothing much we can do there. However, during the interest rate decision later in the day from the European Union, we can probably see some volatility building here, as well as we know that the dollar is going to be boosting up later through the day. The British pound, however, broke above the 200 exponential moving average just a few hours ago in the morning European trade. However, that was after we have achieved one of our objectives down here in the previous session, which was just about enough to get the bearish scenario invalidated after it broke above the 50 exponential, where it actually came at a sideways direction before breaking above the 200 exponential. However, one of the currency pairs which would be mostly watched and extremely volatile throughout today and tomorrow, based on the outlook of the Federal Open Market Committee and of course the Bank of Japan, we could see extreme volatility here on the USDJPY. Right now it's also in a tight range between the 50 and the 200 exponential moving average, tightening the range of 30 pips. It was 50 yesterday. However, there is nothing much we can do there, as further direction should be, of course, proved later throughout the day. Crude oil prices bounced off as yesterday. It reached a low level of $47 a barrel, and of course it bounced above the 50 exponential to trade right now at 48.55, and this is on the 500,000 stocks of crude that were drawn the last week, and that's of course according to the weekly bulletin from the American Petroleum Institute. The data came out in yesterday's session, later in the US session as well. Looking at gold prices, they were trading slightly higher as yesterday, as we of course expected the prices to test the recent lows here just below the 1200 level. It reached last week a low of 1194.80. Of course, it tested that level. It reached as low as 1197 and bounced back above the 1203 key level here, which is the 50 exponential moving average. Right now, the downtrend is still intact. However, it really depends on the data throughout the day later. And of course, ladies and gentlemen, that would be the information that we're all looking for. The Federal Open Market Committee, its policy meeting, and of course, whatever they say, we're basically getting a lot of volatility. And if it's a positive tone, a hawkish tone from the Fed for more than another 2 rate hikes throughout the year, we can see gold slipping further below, and of course boosting the dollar and everything else along with it. Well, that's about it. Of course, I'll keep you up to date again tomorrow. And of course, please like or subscribe. See you again. Bye-bye.